Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So we're going to get into it today, but I want him to be able to talk about what he's created, how you guys can use this, and we'll work on it together to show you guys how you can use this to really determine your risk level, if you're comfortable with your risk, if you want to decrease your risk, if you can increase your risk, right? We're going to get into how this tool can really help you in deciding how to trade, right? And the decisions that you make when trading. But Matt, I'm gonna go ahead and let you pull up your stuff, Matt Jazz, and we'll get right into it. People are asking where to get the calculator. We get done showing you a little bit about it and how to use it.
Okay. So now something about this calculator and why I made it first time. This is just for me to see in which level you entry, and then how many risk, how big risk is if you are in what position. So for example, if we start on level 3 with so after level 3, so our entry will be on level 4. So for this, I would like to know what happened if we have casual range and range multiplicator. So we have 21 pips range, and this is standard 1.45 range multiplicator. So if we leave this like it is, so this is the basic settings on EA, on GearBox. So then we say, okay, if we enter after level 3, then gear entry will be at level 4. So in this case, we have here, okay, level 4 entry will be after 149 pips. So this we see here. So level 3, level 4,
yep.
level 4 is 199 pips. So next open trade, so next open trade would be after 70 pips. We see here. Okay. So in this case, we look what is exposure if we start with lot size, for example, 0.01. So this here is for smaller account. So we start with 0.01 lot size, and if we have on the account $1,000, so I must say this is just if we for one pair, not for free. So we are looking just for single pair, currency pair. So not if we have 3 times more, okay, we must give it 3 times more. But in this case, I would say this is 0.1 lot per 1,000. So if we want to say 0.1 for 2,000 euro, we just put 2,000 euro inside. So in this case, we say, okay, we start with after level 3, is our entry. So on the level 2, so when we will be open next trade 0.2, lot size will be draw down about €6 or dollars, and this is 0.45%. So this is when the next open trade will be at drawdown will be so high. So when the next lot open trade is 0.3, and the drawdown will be at start when the open trade next will be 1.67%. And so on. So in this case, you see what is happening. Okay, you can see now I have around $100 drawdown. So you can see, okay, we are very close that will open next trade 0.4 lot. And then in this case will be around 5%, or if we small this amount, we have just $1,000, then in this case is 28% when we enter in level 5. So here we have levels. Here we say have lot size. So in this case, if we say, okay, I have about $3,000, and I will put here 0.02 at start. In this case, you will see first trade will be size 0.2, next 0.3, and next 0.4, and so on. So in this case, if I change to basic for smaller size, 1,000. In this case, I want to show you that if we enter, I don't know, after level 1, we see that it is, we are on level 6, just on 34% of drawdown, or 346 euro dollar. So if we enter faster, it's smaller drawdown, then we have more open trades, because the range between next, here we see range, next is 38, next is 55, 52 pips, and so on. So here we see what must, how many pips must be for next open trade. So from first trade to another, we must make 38 pips, then 52, and so on. So here we see the range of next open trade, and here we see how big drawdown would be. So in this case, you're easier to decide to see why GearBox is great, because if you enter too early, then in this case, of course, you have a bigger drawdown. But in other case, the range between one and other open trade is smaller, so you can get more trades. But the basic logic is to find what is the best way to enter and have just about 2 or 3 open trades for one currency pair. Because in other case, if we are go in too early, we see the drawdown is dramatically going up. So the best way is to manage what is the best way for each currency pair, and that we are looking, of course, what is the best entry. So with this, you can calculate a risk. What would be the risk if you open next trade, next trade, next trade? So I helped with this because if I look when there is resistance point or support lines, to easily decide if I stay in the trade or I go out. But if you have a bigger account, so if you have a bigger account, then you are using this side. This side is when you use, I don't know, 0.1 lot or 0.2. So for example, if you have about, I don't know, $10,000, and you say, okay, position size multiplier will be 1.15, and then you have starting lot size 0.1. In this case, you see that here we have on the right 0.1 for 1,000, and this is 0.01 for 10,000. So basically the same, but because range multiplier is smaller, we here see that if we have, I don't know, 5 open trades, in the left side, drawdown will be just 8.6%. And in the right one, we see 15%. So in this case, we see if you have a bigger account, the risk with opening level of trades is smaller. So I don't know, in level 7, it's around 32%. And the level 7, if we start with a smaller account, it's about 70%. So with this kind of tool, you can manage how your risk management when you start to go in the trade and so on. So also you can change everything because GearBox with GearBox you can do a lot of things. So you say I see that one good trader have just about 15 pips and range 1.2. So in this case, you see that if you smaller this amount, so it's a little bit faster, everything, and also drawdown after more levels is less. So in this case, you see before was about 38% at level 7. Now it's just 11% because we smaller the range between the gears. But of course, in this case, you make just about in level 7, just about 214 pips range. So it's a little bit less than if we go on classic way, 21 pip and 1.25. So in this case, you see level 7, we made already 553 pips. So this is classic basic situation how you can use this tool calculator to see in which way, in which range, what drawdown you can expect in smaller or bigger accounts. That's the point of all of this calculator. So that you can prepare when it's maybe too high and you go out before there is too much risk for you. So this is basic concept. That's all for me for now. Okay.
I love it. And so just to talk a little bit more about how you guys can use this, as you see the start lot small account, anything under $10,000, you're going to use the section to the right to get accurate readings. And anything over $10,000, you're going to be using the section here to the left where it says start balance 10,000 euro. So basically anything under 10 grand, you're going to use this smaller side right here. And then anything over 10 grand, you're going to be using the other side here to the left. Now, when calculating your risk, obviously this is per one single currency pair. So if you were looking at, say, GBP pairs and you were on, let's say, Sniper, all right, you're going to probably average it out where you're looking to enter around gear 6, right? So if we were to go put gear 5 entry on the chart instead of gear 1 and 2, Majaz, you see you'd be able to, if you change the start gear after gear 5 right now. So I just want to show somebody like example of how to maybe calculate risk over multiple pairs. So we'll put 5 gear 6 entry 5. Yep, 5. So on GBP, most of the time you're going to be entering on 6 on Sniper. So if we were to just take a look at, say, GBP, let's say you got stuck in 3 correlating GBP pairs, which obviously keep in mind the correlation filters coming soon, but just for ease of risk and management, all right, you would multiply this risk by 3. So, right, at what point do you get into, 28% drawdown? And you'll see 28% drawdown, right, is going to come in this scenario after we've gone another 843 pips past your original movement. And if you go study history, you'll see that many pairs haven't ever had those kind of historical movements, but we're talking about over 1,146 pips from GBP pairs in one direction, put you in 28% drawdown on one pair. All right, so what would it take to blow an account? It would take 3 correlating pairs, all with these entries going over 1,000 pips in one direction, going 843 pips from when you entered to technically blow an account, right? That's how you'd have to look at that risk. So somebody might say, well, that could still maybe happen. It's like, okay, well, you also have to keep in mind balance protection exists in GearBox, which also would allow this to be a much larger number, because with inside of GearBox at 25% drawdown, it's not going to take another trade anyways. So that also is massively going to help you. So what you got to look at is really, we can withstand large movements. We can withstand large trends. The question is, can a smaller balance also withstand it? So like in this case, we're we're seeing on a $10,000 balance, 28% drawdown came right there at 1,146 pips. Well, if we go to $1,000 balance, all right, that same movement has it in 51% drawdown, right? Just because it's inherently more aggressive on a smaller balance. Really what I've noticed is typically less than $5,000 is going to be more aggressive by nature with the normal same lot size as, say, a large account. But when you take a look at that, all right, that same concept goes for your risk. And that's why I always tell people the smaller the balance, they should be using Sniper or Super Sniper, right? Unlike those small balances, definitely be using Super Sniper. And on like $1,000 account, don't increase your max pairs too much, because as you can see from your risk here, all right, even if you were just running GBP pairs, but 3 of them all went against you at the same time, it doesn't take a lot of movement to really get into some trouble with GearBox if you aren't playing it safe, right? If you are playing too many pairs at once, or you're playing lower entries and using swing. The other thing too is you can also decrease your lot size, right? So like not just if you go to change the starting lot size, not on the $1,000 one, but on the $10,000 one, change it to a 0.07. All right, now we take a look at that. This now takes us to where if something went over 843 pips past our entry and over 1,146 pips with no retracement, one currency pair, that would only have you in 20% drawdown. The likelihood of 3 currency pairs doing that, I mean, let's talk about it, right? Especially correlate, even if they're correlated still. It's highly, highly unlikely. So that also puts you in a much safer predicament where we have said after, $10,000, $20,000, $25,000, you should start to lower your lot sizes and not stick to the typical 0.01 per 1,000, because it's always better to be more conservative on larger money than it is to be more conservative on small money, because being more conservative on small money sometimes can get you in a spot where you don't even make any money. But being more conservative on large money is okay, because inherently you're more comfortable with a smaller % return monthly when you have more money than, say, somebody with a smaller account. So like I said, this risk calculator is a huge thing. And Matt says, I'm not sure if you've put in the chat yet the link for the calculator. If you want to share the link in there with everyone, and we'll keep talking about this real quick. Here, I'll take back up a screen share so you can. I got it here. So like I said, when we take a look at, say, this calculator, all right, and we have these same exact settings here and inputs, really it's just calculating your risk. So like, let's even go back over here to the entries chart, and let's just say on average, we're entering around gear 4, between all the pairs. So we could even just take a look at gear 4, right? Gear 3 entry, so 4, entering at 4. I mean, still, what is our risk? All right, on $1,000 account, I mean, yeah, if something goes massively against you, it's not going to be ideal ever, right? Especially if you're only entering on 4. Like, let's say you enter in gear 4 on, okay, well, let's take a look at a pair that's troublesome right now, right? Let's go take a look at, say, EuroCAD, right? EuroCAD previously was entering for people in gear 3, 4, same concept, right? So we'll take a look there. And I know that for many people, it's gone 500 pips since they entered. So we're already down here, right? There's people who are just in that one pair. They could have been over a 10% drawdown, or if they're in a smaller account, that one pair could already have you in 30% drawdown just on one pair, right? Because of the nature of the move, right? It's just the nature of the beast, where, when you have a smaller account, this is why I always say run less max pairs trading, because people start running 3, 4, 5, 6, 7. I mean, I've seen people running 10 max pairs trading, and you just got to calculate your risk and go, is that sustainable? And chances are most of the time the answer is no. You know, same concept goes for a 250 euro balance, right? On Super Sniper, right? Let's talk about the Super Sniper, right? Super Sniper was really designed for these small, tiny balances. And most of the time you're averaging out to where you're probably entering gear 5 all the time on Super Sniper. So we'll go here and we'll put 4, enters on 5. All right, so even on Super Sniper trading one max pair, what's it take to blow that account? Not that large of a move, right? You could enter after 209 pips on some of these pairs, but you know, by the time it goes another 400 pips, it's going to wipe a tiny account. Now, don't keep in mind, I've been doing this successfully on a $250 account since August, and it has not blown. It's only gotten a 40% drawdown. But the point of showing you this is to show you that this is why Super Sniper is a thing, right? Or even 5 and 6, you really want to be able to withstand a larger move. So you want to make sure that, you know, if you're playing with small capital, you're not trying to run too many max pairs. You're not, you know, increasing your lot size. You really just use this as a tool to understand your risk, right? This way, you know what it takes to actually lose all of your money. I think that's the most important thing. If you can actually see what it takes to lose your money, you can look at the market and say, am I being too aggressive or am I being conservative enough? Am I being conservative enough that a major black swan event could happen and my account's intact? Or am I playing maybe a little bit more on a higher risk tolerance than I'm comfortable with? And keep in mind, you know, I'm comfortable with 0.01 per 1K up until 10K balance. And then you want to start decreasing it. But some people, you may start decreasing that at 5,000. You may run a $5,000 balance with a 0.02 starting lot or 0.03 instead of 0.05. Well, let's look at the difference, right? So in this case, just decreasing that lot just a little bit, even on a $5,000 account, look at the different situation it has you in. You could be entering on gear 5, 209 pips in, and what's it take to even get on one pair and 14% drawdown? Well, it takes right there 600 pips. 600 pips. So 3 pairs could go 600 pips against you, and you'd only be in 45% drawdown. And that's 600 pips against you from your entry. That's 833 total pips with no retracement. So, you know, it's showing you how you can really withstand large market movements and understand, you know, you can sit in consolidation, you can sit in drawdown for a little bit of time. There's times where GearBox might get you in trades that last a long time. And just to give you some insight of that, I want to show you guys my thought processes here. I'm going to show you a really aggressive account. And what I'm going to show you is first I'm going to show you a conservative account, right? So this is my conservative swing account running 3 max pairs trading. Okay, it got into some drawdown in February. It took some losses. It made them back. But it was only trading 3 max pairs trading. Now, I'm going to take you over here. This was a $1,500 account running 6 max pairs trading on swing. Highly aggressive. Got in higher drawdown, took a loss, has recovered, but not fully. But look at this. We started in drawdown November 24th. It took me till now to get out of it. I even took a loss. But I want to show you guys something. In August, I did 14%. In September, I did 15%. In October, I did 11%. In November, I did 17.95%. In December, I only did 4%. Really crappy, right? January, I made no money. February, I took a loss. March, I got back into making money. But why I'm showing you this is even though this was a more aggressive strategy and got into some trouble, did GearBox recover? Yes. Was it able to sit in drawdown, use the proper balance protection and risk management strategies to withstand and hold that drawdown until it could get out of that trend and it swung back? Yes. Did I still beat the average American hedge fund on their yearly public return? And half of the time? Yes. That's a winning strategy. So the point I'm making here is there might be a month you take a loss. There might be a month you make no money. There might be a month you're in drawdown the whole month. But if consistently there's months that you make plenty of money. Is that okay, right? So 16, 17, 12, 20, 5, 21, only 1% there, only 3% there. Oh, that's crappy, right? I was doing 17, 20. No, it's just the market. It's what we get, what the market delivers to us, right? We're not going out there trying to force it. We're letting the market bring us the profits that are going to come when they're going to come. Same with my $250 account. Yeah, this thing's not covering a monthly fee, but it's also working. Super Sniper, one max pair trading. So again, the point I'm making here is you just have to understand your risk management. You have to understand that GearBox is a long-term product. It is going to be something that can get you in trades for longer periods of time if you get stuck in a trend. And you know, when that happens, you just gotta deal with it. But then let's go back over here and let's take a look at our one pair data. We always love to talk about this. This is why we eliminated JPY pairs and put them in the worst performing, because forward testing data showed us that these pairs were the worst performing. But when we look at profitability, all right, this is the first thing. We want to look at all this data that exists. So first, we know that these pairs in yellow, we shouldn't even run them anymore. If you're not in open trades on them, eliminate them. All right, next, profitability. All right, what pairs have had the highest profitability on swing settings through forward testing? And then what have now had the absolute best gain? And recently, AUD CAD actually just came up. It's not currently in our best performing list, but it's going to be. It only had it did have a higher drawdown than some of the others, but 22% drawdown, which was very similar to EJ, which is in our best performers, or EU. And because of that, we're going to be adding AUD CAD in the best performers. And look at this, AUD CAD has crushed it since October on swing settings. Just on a little $500 account, one pair by itself, it's taken 82 trades, which it's won 82% of. And it's really cool to see stuff like this, right? We love to look at the data to see what pairs perform the best, which ones perform the worst. All right. So AUD CAD recently broke its way up into the best performers. You know, obviously, we eliminated AUD CHF because the drawdown was too high. Anytime something gets over, say 50, we start to question it. We increase its entry, 25% drawdown on swing settings. We increase an entry by 1. We've done that on all of these. CAD CHF, you can see, was bumped up twice because of how high it went. And we just continue to look at the data and analyze what performs best, what performs the worst. Right now, you can see Euro USD is getting tested. It just got a 27% drawdown. Chances are we're going to raise an entry in Euro USD by 1, right? Because it just faced its highest drawdown. And, you know, just kind of seeing, hey, what works, what doesn't, what's the best, what performs great with these strategies. And let's continue to look at data. We know the GBP pairs have performed great, USD CAD, NZD, USD, EJ, right? We know what ones have performed consistently through time, and which ones have also gotten us into some trouble over time, right? Let me read some of the chats here. Awesome. Steve wants to go over the 3 different take profit options. Absolutely. I'd love to do that. Steven said, when I set up my account of 1,000 on January 7th, it was set up as swing as recommended. I know nothing about Forex. Now you're saying Super or Sniper are best for smaller accounts. Absolutely. Swing, a lot of people have been running swing because they wanted to see more trades. Sniper is going to get you in less trades by default because you're inherently waiting for one more entry. So, right, if we go back over here and look at this chart, what ends up happening is a lot of people choose swing because they're just getting in one entry sooner. But, you know, what does that one entry sooner mean? Well, if something trends against you, if you entered, for example, on, let's say, even GBP AUD on swing, you're entering on 5 instead of 6. Well, let's look at the difference there. That's 93 different pips. That means that's a trade that you're now negative 93 pips and you wouldn't have even been in. Or if we go look at, you know, say USD CAD, the difference isn't as big, but USD CAD, you're going to get into that trade after 49 pips one way with no retracement, when with swing, you were waiting 87. So essentially double. So yes, swing's going to get you in more trades, and any time that you know, a large trending move happens, if the trades that trigger on your account, you know, are the trending ones you end up in, you're going to have essentially more risk. Absolutely. But you know, just like the account I showed you on swing, it comes back, right? And that's why I want to show you guys that. That's right. This is my aggressive account, you know, running 6 max pairs, and it's ran through, taking the same beatings, and recently just finally got out of drawdown. From drawdown started November. Many of you didn't even experience this drawdown. Many of you were just closing profits this entire time, and this account was in drawdown. And the reason I show you that is because there's going to be new people that come in that their accounts just start crushing profits. Meanwhile, some of you who got stuck in some trending moves might be in drawdown for a little. Some of you have already been in drawdown for a little. That is a part of it, right? You know, because again, we can't force our way out of a trending move. If we get stuck in a trending move, we have to wait for the market to come back to where it needs to for us to get out at a break even, a profit, whatever it may be. And that's just the nature of the beast. We're not going out there trying to force our way out of the trade. We're like we said, taking a chill pill, letting the software do what it does. If balance protection's active, it'll do what it needs to do and eventually find its way out of the situation. Especially with a lot of the entries we have. And like I said, this is why it's key to understand the risk calculator. If you understand your risk calculator, you understand that many of you can just chill, right? And have patience. But if you were being overly aggressive, you might take a look at the risk calculator and go, I need to close these trades right now because I was just being aggressive, which I saw somebody being extremely aggressive recently and came in a chat. Somebody said, how do we wind down GearBox trades to close the account? I don't really know what you mean by wind down. If you mean get out of trades, you wait until they get out. What gear would you recommend entering with 1,000+ account being conservative? Well, again, remember there's preloaded strategies. So preloaded strategies means that, you know, you can choose between swing, sniper, or super sniper. It'll preset these gears in all the different currency pairs you open based on which strategy you choose. But I'm a big fan of sniper always. How do we wind down trades in GearBox to close account and move on to another broker? Again, you're going to have to just wait till you get out of those trades. There's no like that is winding down. Winding down is just going to be waiting till they're at break even or profit and get out of them and switch. The list of pairs recommended removing, it's right here. It's the pairs in yellow. If you don't have open trades on them, definitely close them down. You know, the JPY pairs for the most part, JPY pairs have never really respected a counter trend strategy. They don't show imminent signs of reversal. They tend to trend longer than, you know, you'd want to, and they're unpredictable a lot of the time. So I've just, in the past 3 years, I've been using EAs. I've never had a great experience with JPY pairs. So I finally just put my foot down and said, you know, why are we even running them? Is there a link for the file of the level simulation in pips? Yep, it's right here in the chat. If you scroll up just a little bit, Ada, you'll see the link for it. All right. Let's see. I was late. I can't see the link. Okay, I'll reshare the link here. Let me just copy it. Seems to not want to let me copy and paste it that way. There we go. No, I got to just click the link again. Oops. That didn't work either. Matt Jess, can you reshare the link in there? For some reason, it's not letting me copy and paste it into that. Andy, is the updated gear chart in the Telegram? It is in the GearBox Traders chat Telegram. It is. Great question. Umar said sniper or super sniper is a generic strategy, but for pairs, can some pairs be ran an aggressive strategy, specifically the green ones? Again, that's up to you, right? You know, you can look at the data and decide how you want to run your account. You're in full control of everything. Personally, for me, I would choose to stick to, a conservative strategy, but that's just me. I've been aggressive enough in my life to learn why I'm conservative now. So I stick to conservative. Here's my piece of advice. If you want to be aggressive, do it on a second account. Do not be aggressive on the same account you're trying to be conservative on. Have a conservative account and then have an aggressive account. But you should never have an aggressive account unless you have an account that is conservative already. If you can't afford to have both a conservative and aggressive account, well, chances are you shouldn't be being aggressive in the first place. And that would be my advice on that. But yeah, Umar, technically you could, if you wanted to be more aggressive on those ones in the link. Abel, CAD, JPY, and EuroCAD, any indication of reversal? Well, for CAD, JPY, I can't tell you, but EuroCAD, I've been looking at the chart and it's looking good. Somebody said, are you buying a Kangen water machine? No, I have a 6A2 and Kangen water and a Magic. I actually have two 6A2 accounts, sold them for 5 years. Was the link? All panels, everyone. Oh, I see the problem. Matt Jazz, when you're sharing the link, the reason no one can see it is you're sharing it with all panelists. You need to click the to all panelists and attendees. So only I can actually see the link. No one can. There we go. You guys should see the link now. Let me know if you all see the risk calculator link in the Zoom chat now. Awesome. I'm glad you all see it. Matt Jazz, you're the man. All right. I know Steve Greger had asked an awesome question. I'm going to go back to it. He had asked a question about take profit settings. So I want to cover those. So let me just go up. I'm going to go ahead and open up GearBox. And you're going to see that you have 3 different take profit settings. You have real trades only, you have real trades double TP, and you have ghost trades plus real trades. So somebody might ask, okay, well, what are the differences between these different take profit settings? Well, the first thing I want you to understand is real trades only is based off the base algorithm. So what does that mean? It means that even if you were to enter a level 4 trade, it's just going to set a 30 pip take profit. Right? It's not going to act as if any of these other trades existed. Where the same thing is going to happen with double TP. Let's say you enter on a level 4, or level 5, level 3, it doesn't matter what level, but you enter on any of these levels, it's going to set by default on the first trade entered a 60 pip take profit. So if you use real trades only, it's going to by default set a 30 pip take profit. Doesn't matter what level it enters on. Same with real trades double TP, it's going to go ahead and set a 60 pip take profit. It doesn't matter what level it enters on. Now, ghost plus real trades is variable, because how ghost plus real trades TP works is it's actually going to calculate your take profit. Let's say you entered on a level 5. Well, it's going to calculate the take profit for this trade based on if it had to balance out the drawdown of level 0, 1, 2, 3, and 4 as well. Even though these trades don't actually exist on your account, right? They were taken in what was known as the ghost server. GearBox is still going to calculate the take profit as if it had taken them. And that would be the difference between the 3. I see people that just are getting access to the link is denied. I'm not sure. The link is view only. Yeah, there you go. Yeah, no, the link is view only. In order, you have to make a copy, everyone. So once you get in there and you can see it, you're just going to go ahead and go on file and make a copy, right? And save it to your own drive. That's how you're going to be able to use it. So once you request it, request access to the calculator, and then once you request access, you won't be able to edit it. You'll just have to make a copy yourself. So once you make a copy to your own Google Drive, like you see mine says copy of GearBox level simulation, I made a copy and now I can edit it in my own Google Drive. Somebody said how to change from euros to dollars. You will not be able to change from euros to dollars. It's programmed in euros. So for the calculator, just if you wanted to figure out similar what it would be in dollars, just Google, euro to dollar conversion, right? So if you had $10,000, what's 10,000, USD to euros? He says, no problem, just change currency. How do you just change currency, Matt Jess? Is that actually an easy thing to do? because to me, everything's easy for people who understand Excel. Me, I don't understand Excel. All right, let's keep reading through. I see your Euro JPY as green. Is that an exception to your no JPY stance? Yes, Nicholas, it is. And here's why. In all the forward testing I've done in Euro JPY over the past few years, Euro JPY does, out of all of them, tend to respect reversals more. And it also is highly profitable. USD JPY, on the other hand, always returned very little profit. And then when it took losses, it took huge losses. EJ, on the other hand, has returned much larger profit. And when it takes losses, but the profit balanced it out. So EJ is an exception to my no JPY stance currently, yes. All right, well, I'm not seeing any, here we go. Bojan hit 2 stop loss in EuroCAD, drawdown stood 40%, Ghost plus Rio 4 hours. Yeah, well, 4 hours, you're probably also hedging, so you're probably playing both sides of the market. My thoughts would be like I would show you on the 1500 account I had here. I hit the same, and I just chilled. I took stop losses and came back, right? So my best advice is the name of the game, patience, which is not always that exciting. You know, I wasn't very excited about this account for a long time because it was just stuck in drawdown from basically December till now, which was like 3 months of drawdown, right? I mean, what we got January, February, March, right? It was in drawdown for pretty much 3 months. Technically 4 if you include December, but it got out. We're back in profit. We're making money. Do we adjust the 25% protection because it's not hedging, taking new trades? Bojan, I would not adjust that. The reason for that is the balance protection is what saves your life. Now, yes, if you are an advanced trader, sure, you could go adjust your balance protection if you wanted to. But why would I not do that? It's because when you do not deploy another lot into the market, you still had all that equity as buffer. Now, if you start deploying more trades into the market and the market continues to go against you, you're just inherently increasing your risk. So I love to call the balance protection feature that kind of just like chill out and just wait it out feature, because you have so much equity still left as a buffer without putting any new risk into the market. And that really allows you to withstand moves and get back to where you need to get to either break even, close the trades manually for a small loss or a small profit, whatever it may be. But again, it's up to you. You know, if you want to potentially take more trades because you think it's about to reverse and you want to, you know, get that next level in real quick, absolutely. But, you know, if you are a professional market analyst, I would always remind you to, you know, keep this probably where it's at just to be safe and let it do what it needs to do. Ghost Trades Gab says, I do not see the link. Check in the chat, not the Q&A, Ghost Trades Jab. Any recommendations for this next week? Absolutely. We're going to get into it right now. So let's get right into the upcoming week. Let's go over to Forex Factory and we're going to take a look at what we have going on this upcoming week. So we're going to go right into it. All right. So the first thing is AUD on Monday. We got rate statements. Yes, David, that's correct. EuroCAD. Monday, April 5th, we have AUD rate statements. All right, we have USD on Wednesday with FOMC meeting minutes. We have Fed Chair Powell speaks on Thursday, and we got CAD on Friday. So we have CAD, USD, and AUD this upcoming week. Should be a great week of red folders. We're hoping that many of these play back into our favor, as always, but you know, it does look like it's going to be a week with some red folder news that could move the market. Nothing too crazy, but you know, these are all major world currencies right now and are you know, Forex majors. So understand that these events can definitely have unprecedented events. So my advice would be the same as last week. I would stick to decreasing the lot size between 0 and 1 per 2,000. you know, instead of 0.01 per 1K. And I would, even if you're an extra conservative user, go to 0.01 per 3,000, just because of the events, what's going on, the recent way the market's been trending. It's always better to be safer than sorry. So that would be my advice on lot size and risk. I would also decrease max pairs trading. I wouldn't be trading anything more than 3 to 4 max pairs on any account. You know, some people are trading 6 max pairs. I mean, really, you know, in the current trending markets and conditions, I would decrease those massively until the correlation filter comes out at least. Which, for an update, since we're near the end of the call, the correlation filter is coming. It is being worked on every day. We are working on trying to advance and make it easier. We do know that correlation can change. So we're looking to do it on the larger time frame on the daily, and find a way to either API it in or make an update, you know, at least once a month to those numbers to really, you know, make sure it's always accurate. But we are working on the correlation filter. This last week, I've had no new trades with sniper strategy, even with OPEC and NFP. David, that sounds possible. Absolutely. The markets have really been consolidating this week. And even if there's been movements in the market, chances are, David, if you're running the daily time frame, sometimes what ends up happening is GearBox trades with the trend in the Ghost server, which means it's not getting into Ghost trade drawdown, meaning that it's not getting to its entry. So oftentimes during really boring weeks, where maybe you're not getting trades, some users lower their time frame because it also opens up the possibility to more trades, as GearBox is more likely to hedge on lower time frames. So, you know, if you're one of those people who got no trades this week, that definitely happens. The markets have been consolidating, or where there's been movement, it's only been in the direction GearBox has been needing it to go anyways, which means that you have not been scoring into any DD, you know, to get into those trades. CJ Worthy, like, great question. When GearBox takes its first real trade enter into one of your year it is, from that point enter the next year and the next year, do the TPs change if price doesn't make it back to that first gear trade TP? The TPs do change, but we have noticed that with real trades only and real trades double TP take profit, that after 3 or 4 cost averages, that Ghost trades only TP actually ends up being smaller. So we are working on adjusting that. We are working on redoing some math and calculations, because we do believe that after a few cost averages, Ghost trades only should still have the largest take profit. Whereas currently, you know, if you're entering on a later gear, Ghost trades plus real trades does have the larger take profit. But let's say you entered on gear 4, double TP at 60, but now it cost average to 7. Now double TP is a larger than Ghost plus real, and we don't think that's right. So we are working on the math behind that, to make it where real trades only and real trades double TP will actually pick up a smaller TP than Ghost plus real. Andy, will all brokers allow hedging? No, not all brokers allow hedging, but if you're typically using an offshore broker that's offering you 1 in 500 leverage, typically they're going to allow hedging. Now, if you're using forex.com or Awanda, they're absolutely not going to allow you to hedge. How do TPs change after each level? For instance, double TP. Again, there's a math calculation in there for that, Marcus. And as I just explained, we are working on that because we do believe that double TP's calculation should be a little less aggressive as it cost averages and set the TP a little closer than it does. But with that being said, I do not see any more questions. Let me check the Q&A last real quick. Pamela, are you expecting USD CHF to drop anytime soon? To be honest with you, no, I hope it does, but I'm not expecting it to drop very soon. I don't expect it to drop today. I don't expect it to probably drop Monday, but it does need to drop. It's just, I don't quite think it's that imminent. You know, but again, I'm not a technical analyst person either myself. There's a lot more professional traders in our community you can get way more accurate advice from when it comes to if something's going to make a move. But, you know, for me looking at it, I think it's going to take a little bit longer before it drops. It's in a consolidated spot right now, and it might even go up a little bit more. But Thank you guys all so much for tuning into this amazing call. As always, it's such a pleasure spending time with every single one of you every Friday. As always, remember, we also have one more Saturday switch call for people maybe coming from another product to GearBox tomorrow at 7 p.m. Eastern Saturday. And then Thursdays at 12 p.m. we have our intraday calls for those who are using the intraday strategy as a second license or are more hands-on users. And as always, precision mode is the best. So look forward to seeing you guys again on the next precision calls. And
if you want, I can show how to change currency.
Oh, well, yeah. Well, for those of you still on who've been asking how to change the currency on the calculator, I'm going to let Matt Jazz show you that real quick, because I know that's a very important thing. Some of you want to be able to use it in US dollars. So Matt Jazz, I'll let you take back over sharing your screen real quick.
Okay.
And we'll close it out from there.
Okay.
All right.
Okay, so the basic logic is if you have euro, dollars, it's the same. But if you like to see in different currency, you can select this and go to data, format, numbers, and you change to currency. I don't know, this one. So you see in the dollars currency. So
you can see the drawdown in dollars.
Yes, but this is not conversion from euro to dollars because it's everything the same. Euro, dollars, because this are units, 10,000 units of euro or dollars. It's the same to calculate the drawdown, because when you start in this, you just say, okay, format, number, and go to this one. So this is just showing different, but not converting from, I don't know, from euro to dollar. This is just to see the numbers of how much money do you have in one currency. So this is basic when you make a copy. So make a copy here, and then you can change this format. How do you want to see, or euro or dollars? So that's it.
I love it.
Okay.
That's awesome. Thank you so much. I hope everyone got that. And thank you so much, Matt Jazz, for creating such an amazing tool for everybody so that they can really determine their risk. And I hope that you guys all got value out of this. If everyone got value from Matt Jazz and his calculator, put a 777 in the chat. Awesome. Well, you guys are going to be seeing plenty more from Matt Jazz. You know, he's a brilliant mind. He's going to be coming in to help in quality assurance and testing with GearBox. So excited for all of you to continue to see more from him and the value he can bring to the community. But thank you, Matt Jazz, for the calculator and helping everyone here. And thank you for being a guest speaker on today's call.
Thank you, Tyler. Thank you for inviting me. And of course, if there will be any upgrades, because why I make this not just public link. If I found something that must be changed or dramatically, some bug or anything, or upgrading for more currency pairs, then I will just inform everybody you must use new link or something. So because of that, I'm using so that I can inform them. But otherwise, no problem. You can use it or copy it and share it around. So
I love it. Thank you so much. And yes, anytime you make updates, you just let everyone know so that they can get the most updated versions. And I hope that you all have a wonderful rest of your Friday, wherever you may be in the world. I know some of you might even be tuning in late night in Australia or early morning. So it might be Saturday for you there. And thank you again so much for tuning in and being with us live on the call. And I hope you all have a wonderful rest of your morning, evening, or night.